Hello. If you are new here, welcome. I'd like to share a bit more about our guest today, Lily Jabbour. Lily is a seasoned startup operator and trusted ally to founders navigating the earliest and often most chaotic stages of building. During her time at Techstars, she ran accelerator program operations in both Montreal and the US before going to lead global accelerator operations and partner management across the EMEA and APAC areas. Over the past couple of years, Lily has worked with countless early stage teams, helping turn bold ideas into structured and scalable companies. With deep insight into the inner workings of accelerator screening and selection, she's learned firsthand what works and what doesn't when it comes to getting a startup funded and supported. From writing about startups in Beirut to working inside one in Montreal, Lily now calls Barcelona home, where she's focusing her energy on impact-driven investment and technology. Today, she's here to share her experience, practical insights, and behind the scenes stories about what it really takes to launch your startup and maybe even land a spot in an accelerator in today's fast moving ecosystem. So sit back, grab a cup of coffee or tea, and I hope you enjoyed the episode. Welcome back, everyone. We have another episode for you. This time, we're sitting with Lily Jabbour for a super interesting conversation about startups, VC world, incubators, accelerators, all of that. So I'm really excited to have you on board.
Good.
Really
Stoke level
excited.
is at
Nice.
100, I think, for me. So I'm really excited
Wow,
to
sky
dig
high.
into the weeds. Yes,
I need to
absolutely.
have whatever coffee you're drinking. That sounds great.
I'm telling you, it's a full night's sleep. It really just takes you to the next level.
Nice.
Yeah, I hear that. Okay, so tell us about your world, Lily. We want to know more about you, first of all.
Okay, I'll try to 30-second elevator pitch it and we'll go from there. So I'm Italian, born and raised in Italy, and then moved to Canada for university, where I eventually in Montreal post-graduation met UA during pandemic times when the world was upside down and was doing weird random jobs, and we met in a warehouse boxing hats. So that was a fun time. That was a parenthesis in my career. Most of what I focused on so far has been the tech and VC world and everything that lies between, with a fun few excursions along those lines. So I think that's what I'm here to talk about, specifically around accelerators, which I think kind of sit at this perfect middle point of tech and VC and startups and startup culture. So yeah, excited to dig in.
So I'm super curious, how did you get into the VC world?
Yes, it's a great question. I still ask myself that sometimes myself.
Yeah.
I never thought I was going to be in the tech or startup or VC world at all. It wasn't an intentional thing that kind of happened. I've met founders that are really, I don't know, have that sort of deep rooted sense that, yes, I am going to be a world-class founder and an innovator and a disruptor, and I'm going to do all these things. Or even investors that feel they have the eye to a great find, a great company, and nurture that talent. That was not me. I was not perhaps so delusional, if you will. I mean it in the best way. But maybe I was even more delusional because I was one of those sort of 18-year-olds that read socialist literature and thought the government and the UN had the power to change the world, and I was going to be a part of that world and public policy and, happily ever after world peace. That was kind of the trajectory I had planned for myself entering uni and at the start of uni. So yeah, I wanted to join the UN. That was my ambition, if you will. And perhaps to some extent, I still kind of believe in those things, although in a different way, but that's a conversation for a different day. But I think many folks, once I graduated university, all your best laid out plans don't really go the way you think they're going to go. And what happened is I'd studied poli-sci and economics in university. I doubled, and then I kind of focused specifically on sort of conflict area studies. And I wanted to move to the Middle East, and I wanted to have an experience on the ground for all the stuff that I'd studied. So I was looking for internships, and I ended up landing an internship in Beirut, Lebanon, but at Wamda Capital. So Wamda Capital is actually one of the largest VCs in the Middle East that invest in Arab founders almost exclusively. And I did not even know who they were. I didn't know what VC really meant. but they had spun up a media division that was headquartered in Beirut. The investment arm is in Dubai. And this media division, sort of the focus there was to create buzz and excitement and sort of more knowledge share community around startups, VC, tech entrepreneurship in the Middle East, which was a much more nascent sort of ecosystem at the time. And so they brought me on as an intern initially as a writer and then as an editor to sort of contribute to this project. And I ended up staying for quite a while, continued to do that freelance for quite some time, even after I came back to Montreal. But yeah, that was sort of my first eyes wide open moment about all this sort of stuff and my first taste of the tech world, if you will, and began to understand a lot of things bit by bit. I talked to a lot of early stage founders. I had the chance to interview quite a few or just go to events and be in rooms with them because ultimately I was working at a VC. And I got to meet just like incredibly interesting people. And there was this sort of emergent ecosystem, a lot of excitement. This was 2017. Things are definitely different now there. But it was an incredible experience. It was super inspiring to see sort of founder driven change as opposed to government or organizational driven change or corporate driven change, if you will. And sort of also see what are problems that actually need solving that these founders are focusing on, which really salient in their day to day in their communities, which was not sort of my experience prior to going there. And sort of what they were building, how they were trying to overcome these things, how they were really trying to, from the ground up, think through something new. And I just found it incredible and so motivated. I sort of my first taste led to what's been a passion now that's developed over the years.
That's so
Amazing.
cool. I'm really curious. Like, is there any differences or takeaways from your time there and kind of fast forward to your journey currently? I think at least speaking for myself, when I think about problems that you want to solve as a founder
Yeah.
or PM or engineer, you always have this grandiose idea that it's a universal problem, that it's really just a blocker of scaling and getting it to the masses, and as everyone has this particular problem. But I'm curious, from your journey, which is so unique, do you feel that that is true, or that problems are inherently isolated and the leveraging point or lever is really going out to VC to then expand into these other more kind of known knowns now that your business has grown and you've uncovered these other problems that kind of align with your business?
It's a great question. It's a hard answer. I think
Yeah.
I don't know if there is one answer because I think ultimately kind of what I was seeing that I didn't see as much, then coming back to Canada later and now that I'm based in Europe here, is I would see it. Well, maybe the first I am seeing it a little bit more. So there's a lot of, it's going to be, this company is like the Uber of the Middle East. It's the whatever DoorDash of the Middle East. So sort of this idea of replicating something in a different market. One, because those competitors haven't entered yet. That's not where they're focusing on. So you have a chance to get that market share early. But also because maybe you understand how operating there is going to be different. And that's going to be from anything, just how traffic works, right? Versus how regulatory bodies work that protect certain interests. And that's going to be different in different places. So that I see now in Europe. Still, we do have a bit of that. Like, I think less so now that the market's matured a bit. Occasionally, you'll still hear someone sort of like pushing themselves as insert ex-US company of this region. So that still exists. But then the other stuff, which I found honestly really interesting, was sort of at the time. So again, like think back to this 2017, it was kind of just a year or two out from the influx of the refugee crisis coming from Syria at the time, mostly, but other places too, towards Europe. And so there was all these entrepreneurs focused on this kind of problem, right? So, okay, how do we bank a population that's unbanked, but doesn't even have a documents, right? That is struggling to get identification. So how could we build ID on a blockchain solution? So like leverage and technology we were talking about in North America, but for solutions that were just, I'd never heard someone talk about that in Montreal before, right? In my head at 21, I thought blockchain, Bitcoin, not interesting to me. That's kind of how my brain worked, right? Versus, this is a technology that you can leverage to create other things, different kind of values and stuff along those lines. So for example, I interviewed a founder that was working for a health tech startup that was operating to enable refugee camps in sort of regions, like in that sort of region, in Jordan and Lebanon, mostly a lot of Syrian refugees at the time, have a sort of patient file, even though they were essentially fully removed from that, right? They left their country overnight. And how do you rebuild that? And then if you're moving from refugee camp to refugee camp, potentially getting resettled somewhere, how do you have that sort of track through? So in that sense, that's not a universal problem, but that doesn't mean it couldn't be applied to other scenarios. A technology like that, we could see how that could be useful in a natural disaster case somewhere entirely different, right? So there's applications there that could move entirely, but I do think a bit of it was also, okay, the problem is not only how do I get more click-through rate on my e-commerce platform, which is great. There's nothing wrong with that. But for sort of the perspective I was coming from was, okay, you can really solve really important life-changing problems here with entirely new things. And I think part of what also made me kind of flip the switch was the fact that at the time I was living in Beirut, I had some roommates, we were all broke, and the roommates I had were actually interns at the UN. So what I thought was my dream job, they had it. And in talking to them, I kind of got this sense of, okay, maybe they're working on some interesting projects here and there, but everything moved at such a snail's pace. There was so much red tape, so much bureaucracy. They were so under-resourced themselves, even if they were, capable and willing to do stuff. And then the other thing that kind of irked me was the sense of, this is the UN Near East Division. That's what's headquartered in Beirut. And everyone who's working there is 90% of them are European, and they went to Sciences Po, the Parisian Diplomat International Relations School. And that's a great school. Should we have only people that went to this one school really solving these problems? Maybe not. I don't know. That's kind of something else that made me think, okay, what's a different path to actually make significant change? And what's a path that's potentially we can make more accessible? Right? Because those jobs, you got to start really young and build your way up. And it's a very traditional sort of career path for most of those organizations. And you guys know better than me, founders often don't have that type of career path. You can become a founder tomorrow. If you have the skill set and the idea, there's no one telling you, oh, you have to cross off all these little steps in between before you can launch your own project. So I think that also appealed to me a lot.
Yeah, I love that. And I ask purely because I think there's this notion as you're thinking about starting something that scale is the first thing I need to think about, because someone's only going to want to invest in me if there's a 100 billion road to $100 million in ARR, or some sort of unicorn status, right? And so you immediately have to think, okay, well, how do I scale this globally? And so I think obviously taking into consideration that there's a lot of first market movers in each of the markets that are out there, and a lot of time that's a good indicator of you having a good idea potentially. And so I think it's important to kind of like dictate that, just dig into that a little bit, that these ideas exist. And, just because someone else is doing it doesn't mean you shouldn't go about doing it as well,
100%.
because it's a matter of who's solving it better. And a lot of times people in specific regions, you're saying that even to the UN situation, right? The diversity of thought and understanding of your core user probably is more important than a lot of things. And so, yeah, I appreciate, do you feel though also that as your journey, since we've been kind of talking about that, has progressed, that you've kind of come full circle into the problems in which you like to focus on from a VC perspective? And I resonate deeply with, I went to school for engineering, mechanical engineering. So I always came out of college thinking, how do I make the world a better place? And I found kind of that avenue through software. And to your point, being able to move fast, break things, but also make the world in which surrounds me at least a little bit better, one piece at a time. And so, it sounds like you've kind of come into this new situation over the years of, your VC position, where you're actually kind of getting back into this world in which you now have the power to go about doing some of those things that you wanted to come out of university actually doing.
Yeah, I think 100%. I think at the core, I still have some of those beliefs and some of those passions. And so it's just a matter of having found, I should say, a different lever, as you would say, right? To just apply in a different way to push in the same direction potentially. And I don't think we should only be pushing from one perspective, right? I think you kind of need a lot of these things for it to really work. But I think for sure I've kept this mentality, and that's what I'm still drawn to now, right? The kind of, because we talk about VCs and startups as if it's one monolith, but it's not, right? There's a lot of different kinds of VCs, a lot of different kinds of startups. And for me specifically, from the sort of accelerator world I've come from, a very different approach from different programs, right? So I'm still for sure drawn to the ones that I think I can feel that we're fully aligned, and sort of this mission-driven aspect of work. rather than a purely sort of profit-driven motive, which is the case for a lot of VCs. I'm not going to pretend it isn't, but I do think there's a bit of a shift there in how some are thinking about it now. Also, just with the diversity of players in the ecosystem we have compared to 15 years ago. So yeah, definitely that's sort of where I've tried to go to, and I'm still trying to move towards.
Okay, so my burning question for today, and I've waited all week to ask you this question, is what is an accelerator?
Yes, excellent question. You're not the only one who has this question. I think a lot of people have it, but don't ask it. So I'm glad you asked. So simply put, an accelerator is a short, fixed term program that is usually done in sort of batches or cohorts, if you will. So more than one participant at a time. That includes a few key elements. Each program will vary slightly, but these are the things you're going to see again and again. Usually mentorship of some kind, some sort of educational or workshop-based content, access to some type of network that is relatively exclusive, which might include investors, corporates, alumni if it's a university, or people within a certain corporation if it's a corporate accelerator. Various types of perks. Sometimes that's discounts on a number of services you might want to access. And at the end, usually a sort of public pitch event of some sort, or the classic demo day term that I think most of us are familiar with nowadays, to sort of round it off, to close it out. I think that's the broadest definition I can give you. The goal of the program is to accelerate, right? So as it states, to accelerate the growth of your startups. If you come in with your company, by the time you come out of the short-term program, you will be 2, 3, 4 times ahead as you would have been without the program. So you're just picking up the pace and getting a lot more done in a short amount of time, which for a really early stage company, and we can chat about it in a second, but especially if you're bootstrapping, that's a year of your runway of your personal income or final savings that can really make a big difference and get you a little closer to a place where you feel you can bring on some more capital, bring on some more talent, or sign a customer, or whatever it might be. That's like the next step in your journey. Does that explain it?
Yes, I have a high level overview now. So a lot of the times I get conflated between an accelerator and an incubator because I don't know the difference.
You're not alone. I think it's not a scientific term. So there is not a scientific definition of difference. I think there's definitely programs that I would think of as incubators that call themselves accelerators and vice versa. So I wouldn't say it's a super strict definition, but more often than not, if we're being relatively general here, an accelerator, I would say, is an equity-backed program, meaning in exchange for your spot as a startup in the accelerator, you are giving up a portion of your equity in your company to whoever is running the accelerator, whatever fund or organization is running the accelerator. That's definitely how it works across venture accelerators. So if you think of the big names in the industry, so Techstars, which is where I worked for quite a while, or you think of Y Combinator, the most famous one potentially, you definitely give up a portion of your equity. I think 500 startups or global, whatever they're called now, Antler, even Entrepreneur First, which is not quite an accelerator, but kind of, you give up a portion of your equity to participate. This is less typical for incubators, although it can still happen. Again, people call things all sorts of names that you kind of have to really go dig in and see what it actually is. But essentially, this is the difference, right? Like a venture accelerator is de facto an investor. It's what their main sort of the core proposition is. But instead of just signing the check, they're bundling a smaller check usually within a whole bunch of activities called an accelerator program and giving you that. Versus an incubator might have different objectives, right? So for example, a lot of universities run incubators. So for them, usually the objective is to sort of foster innovation within their cohort of graduates, usually like at a graduate level, or sort of establish themselves as like a big hub for innovation at a specific vertical, and get in on the ground level. Or sometimes they also just want to help commercialize what the research focus has been in that specific university. So that could be one way of doing it. There's also, publicly funded incubator programs. There's a lot of different kind of players in the space, but they'll have other goals that are not a return on the investment that a venture accelerator ultimately, the end of the day, that's what they're there for.
Okay.
For sure.
You quickly talked about some of the funding equity aspects and kind of the give and take there. I think one of the big questions that I have heard from other founder friends, early on in their process, and what might be helpful for people listening or watching, What is the particular stage, right? Because there's obviously accelerator, if for those who aren't familiar, you're potentially doing angel rounds or family and friends. What is that particular round, or how are you going
Yeah,
into this expecting to kind of prep, and what is that particular round called, maybe,
great
things of that
question.
nature, I think. Yeah.
Yeah, so I don't think there's one answer here. I think so. An accelerator is early stage, like by definition. They're not a late stage investor or even a mid stage investor, if you want to call it that. For a lot of, I can speak for Techstars because I been there for 5 years, but a lot, I would say the majority of the companies that come into program, we are the first ones writing them a check at Techstars. That's their first check. And I sometimes think about it also, and this goes back to what we were saying before, is maybe you're a founder that is coming from a non-traditional background or tackling a non-traditional challenge, right? So it means usually you're going to have an even harder time getting venture capital, right? And especially if you're coming from an underprivileged background, there's no friends and family round. That's a concept that we now have, but it only really applies to a small segment of the population. And that's not the only people that have the talent and skill and will to be founders. So sometimes a program like Techstars, which gives you a small amount of capital, is your friends and family round. It's like the first check that's going into there. That's not your own personal savings. So I would say usually it's the first real investment you're taking on board. The other reason I say it is because if you've taken a different form of capital on board before in exchange for equity and you've screwed up your cap table, they will not invest in you. They're not interested in getting in on the ground floor
We
with
could have
someone who
a whole
already.
conversation just on that, probably.
So I think sometimes we see a lot of companies sort of incorporate to get into the program, right? So we can talk about that a bit more in a minute. I would say it's often first check, but not exclusively. Sometimes folks have raised, again, a friends and family round, or maybe an angel investor, or maybe they have some sort of small, I don't know, like pre-seed round, if you want to call it that. But it's pretty rare that you will have closed an actual full round if you're about to go into an accelerator. So I think it's more like accelerator is the step to get you to then open and then hopefully close that first round post program. Traditionally, I would put it in that stage. Most of the companies that come in are maybe incorporated in the past 18 to 24 months on average, although not always. So again, these are generalizations.
Yeah, and just to clarify that, so effectively a brand new startup that's incorporated and coming into an accelerator, or is been accepted, let's say theoretically, they're getting their seed round through that accelerator, and then ideally post demo day they're raising kind of that first Series A, let's say.
I mean, I don't think you're wrong. I think the amount of money that a venture-backed accelerator is giving you, and it does vary from program to program, is very small. I don't think it can qualify as quite a seed round. It qualifies as a friends and family check. It's small. It's not the main reason you go to an accelerator. They're not dishing out the biggest checks. And also, it's not going to be considered as a valuation event for any round you raise after, right? Any good accelerator that gives you decent terms. So do your research. If it's a renowned program that gives you decent terms, first of all, it's not a price round, right? It's usually a standard deal for everyone, right? Even though it's different kinds of companies that might come in, and it's not a valuation event. So when you then go and raise, they're not going to take that into consideration as, this is the deal you made for this portion of equity, and that's the valuation you have done. And a good investor is not going to consider it that way. They're going to consider it as a separate category, as if you were to raise the seed round, if that makes sense. And yes, the goal is to raise after for most companies, although not all, right? And I think also depends what point in time you're talking about in terms of how quickly that actually ends up happening. But that might not be the only goal at the end of the program, right? Is maybe you signed a pilot project with a really big corporate, right? And that was quite challenging to get to, and the accelerator helped you get there. It could be other goals as well, but usually the raise-in is soon on the horizon.
Okay.
Yeah.
Okay, I have a very basic question because I'm trying to get up to terms on here. What is a cap table?
So a capitalization table. So essentially, it's the spreadsheet or document, if you will, that sort of outlines the ownership structure of your company. So if you guys co-own this podcast, Never Build Alone, and it's a 50-50% split, that would show up on that cap table. And then if I want to buy in at 10%, then once I bought, that's going to show up on your cap table as well. And so when we talk about messed up cap tables, it might be you guys are co-founders, you're doing 50% of the work each, but for some reason way, you have 90% of the equity in this company. That's going to raise a red flag for me. I'm going to be like, why is that? That doesn't seem suspicious. What's going on? What's the dynamic? What's happening here? And I'll have a lot of questions. And unless you have really good answers, I'm going to back away because that just seems like a messy situation to get involved in. So you kind of want it structured as clear, makes sense. And also, especially if you have like early stage employees, if you're giving them a portion of equity, which in a startup, that's kind of how you're recruiting good talent without a lot of cash. What sort of vest and schedule are they on? How much capital are they going to get in your company at which point? And who are they even, right? I'm going to have a lot of questions about that if I'm going to buy in. I want to see who else is there.
Okay.
Yeah. So anyone who just listened to that, make sure you have your ears pinned back and go back and be very detail oriented with your cap table creation, how you go about splitting up equity. And then even more importantly, maybe you could, agree or disagree to this, Lily. When we just talked about fundraising, make sure you're doing that intelligently because you can really screw yourself if you do a
100%.
really poor fundraising round early on and you are really attracted to this particular angel investor. They kind of pull the rug out from underneath you from a business perspective. And then you go to raise or you try to go into get into Techstars or YC and they reject you because you have really just over leveraged yourself as a business. It's not enticing for them to actually invest in you from a actual percentage of your business.
It's great advice. There's a lot of solutions out there. I'm happy to give you guys some links and you can plop them in the description.
Yeah,
for
that'd be great.
Really early stage startup oriented cap table solutions. A lot of the big accelerators partner with a few. So if you're applying, they're gonna, that they probably have a discount of some sort to because they want a good cap table, right? So it's a win-win-win. But it's gonna be necessary for you to get into a program, 100%. Maybe when you first apply, you can be still thinking about it, but definitely you got to get it done before you're accepting it. And I think it's a really good thing also to think through, especially I see it from obviously first-time founders, but founders that are coming from a non-tech startup background, especially sort of if you're coming from an academic background. I've seen people get screwed over where they have like some advisor that does 10 hours of work a month, but they somehow have 20% of the company for some reason. And once they're on there, it's really hard to get them off. If you got screwed early, it's going to be really hard to raise. So definitely be careful, do your research.
And start early too, because it takes a little bit longer to incorporate than you would like to think.
100%.
Yes, get
also
started
depends where
soon.
you're doing it.
Yes.
So that's another thing I'll say is for any of these programs, or even if you have a local program that seems really interested to you that is venture backed, look into what can they invest in. So for Techstars, for YC, for a lot of these, if they're US based, they're going to have to follow US law around sort of how they invest and what entities they can invest in. If you're incorporated in an unusual geography, it might take longer. It takes a lot longer in some places than others to incorporate or even to get your investor properly on your cap table. It's something to pay a lot of attention to and not kind of take for granted when you're really starting out. And there's no right answer. Like a lot of people are like, oh, Delaware came in, you're done. No, that could be the answer for you, but there's other reasons why you want to be incorporated somewhere else in Canada if you're a Canadian company. And this actually takes me to a whole other thing I was going to mention at some point is there's not just bootstrapping and fundraising. There's all these other options in between. For example, if you're a Canadian founder, non-dilutive grants. There's so many grants in Canada. If you incorporate in Canada, you're a Canadian founder. There's a good chance that you might qualify for some of these. So take a look into that as well. Don't bite the bullet and go only for one or only for other, especially if you're on the fence about whether or not you want to fundraise. Look into other options, and grants is a good one that might also make you lean one way or the other about where you want to incorporate a startup.
As a founder, what are some questions that I can ask myself to understand, should I go out and fundraise or should I really try to bootstrap?
Good. Yeah. Great question. I think this is kind of age-old question. Should I do bootstrap or should I fundraise? And I think it's a bit of a trick question because I think ultimately for most startups, the answer is going to be do both. Do one at some moments, do the other at other moments. It's not like day one of your company you're making this decision. Give it some time and do your research on that. Secondly, as I said, there's other options in between. Grants is a great one that I mentioned. You can look at venture debt structures. These are much more common now than they used to be. Or look into those options if it's something you're willing to consider. There's non-traditional types of VCs. You can look into more, okay, I don't want to raise from big institutional VCs, but maybe I'd rather a network of angels, and maybe it's a really niche sector that could be a better fit for you. There's many more sort of solo GP VCs, if you will. So you're really working one-on-one with someone or things of that kind. Look at all the options. Don't just limit yourself to two as you're thinking this through. And then the real answer is it depends, right? Which I know it's super cliche, but it depends
Listen,
on your
we're two product managers here. It depends is
yeah,
our token phrase.
exactly. I think if it's not, it depends. I don't trust that answer. But yeah, it depends on your business, your industry, your amount of experience, how comfortable you personally are with risk and risk tolerance. Ultimately, I would say, bootstrapping sometimes is revered as this like gold standard. You really like sold your way to the top all by yourself, and wow, good soldier in a storm kind of attitude about it. But essentially, bootstrapping just means funding your startup with your personal savings income. That's what it means. It's not like this glamorous way of doing things. And also, it's a big, big degree of personal risk, right? Something like 90% of startups fail. That's important to think about at the start. Don't let it get you down, but consider that. And for a lot of founders, and again, this is what I care about, is non-traditional founders, they can't afford that. Like that's, maybe they already have debt from schooling. Maybe they have to support their families, or their whole family sent them to another country to try to do something better for themselves. And that's a really, really big risk to take. I don't think we should only hail bootstrap founders as the ideal way of doing things. So ultimately, bootstrapping means you maintain more control over your company. You have more freedom. You're really the decision maker. Maybe in a way, it pushes you to really validate what you're working on earlier, because you need that first customer. You need that revenue to start coming in ASAP, because your personal savings are going to be more limited than a round you're going to raise in most cases. Maybe you're some sort of inheritance genie.
Right. Maybe a
A
generational
lottery
wealth
ticket.
played
Yeah.
into.
Let's put that aside. You're going to be motivated to get your revenue up earlier. But I think it's viable maybe for startups that are, it's harder for startups that are focused on maybe R&D heavy things that are just going to take a lot of time. It's like bioscience type of startups, health tech startups,
Hardware,
robotics, take a long time. A lot of like climate tech subsectors, a lot of time. All of these long research, long build times, validating, regulatory approvals, all these things, some of which are not in your control, are just going to take a long time. So bootstrapping is just really, really challenging. In that sense, maybe you're just going to move. You're going to move slow. Think about it. Look at some other options. It's also going to make it really hard to pivot. If something's happened, something changes, and you're really dug yourself all the way in, I think it psychologically becomes harder to pivot as well. If you bootstrap yourself in this kind of situation, you might end up really reliant on your customers, right? And your first customer might be not the best customer. Maybe they're super picky. They want you to customize your solution in a weird way. And then you're hyper focused on that because you need the revenue, because your runway's so short, but then you're not really building for scale, for what's next, for what your vision is. So you can kind of lose track a bit. On the other hand, fundraising is also not easy. It's not like you show up and you say, I'll have some money, please, and they hand it over. So it's tricky. And it is a sort of niche, networked in boys club feeling type of space often. Let's not pretend it's not. I think it's changing slowly, but slowly. It kind of feel a little small. If you don't have a way in, if you don't have an intro, if you don't have a network connection in, it can be really, really hard. Something to keep in mind. But by raising, you're sort of intrinsically losing some control. You're giving up part of the ownership of your startup. You're allowing someone else to have a seat at the big decisions type of table. As we just said, do your research. Don't make them have top seat unless they really deserve it, or you're much later on in your process. They're going to have some decision-making power. You're going to feel a bit of pressure potentially from them. That can happen. Fundraising can also become a full-time job for the CEO, and that's often not why they started the company. And that's not what they're good at. You can be really great at whatever it is you're building, or really great at the business side of things. Doesn't mean you're great at fundraising. It's a whole other type of skill set. You might kind of lose track. You're like, why am I even doing this? I'm just going out and talking to people for 6 months, and everyone's telling me no. Is this why I left my corporate job to do this? I don't think so. So it can be kind of demoralizing in that sense, for sure. It feels like a chore you're kind of always keeping up with. But on the flip side, if you manage to get that sort of ticket whatever it might be, again, we talked about various options, it's going to free up your ability to do more. So that means to spend more time on things, all the R&D. You kind of really need venture funding to do that properly for a lot of things, free up your time to then focus on really big, complex things. You can bring on board really great talent to help you build, to help you, where you're maybe not the strongest, people that are really networked into the industry, that have a deep expertise, a technical background, whatever it might be. So that's part of it. The thing I'll say is, and this is my opinion, I know there's people out there see them that don't feel this way, but my take is, if you're only bringing in an investor to have extra cash in your bank account, I think you're kind of really missing out on what is some of the most impactful and fundamental aspects of having investors on board. And by that, I mean, a good investor, especially when you're really early, the first and few investors you bring on, a good investor is a good co-founder. So they're not just putting in their cash, they're putting in their expertise, their resources, their network, their advice, their commitment to you, to your company, your vision. They're looking for a win-win outcome, especially the earlier they come in. They really want you to succeed, and they know it's going to take a long time to really get there. And a good investor will do everything they can to help you succeed, and they will open doors. They will open doors because, again, it's all this niche sort of tightly knit community. Once you have one on your side, they will intro you to other investors, to potential customers, potential talent, mentors, portcos in their portfolio that maybe you can collaborate with, learn from. So it's going to be a lot more than just having some cash in the bank if you bring in a good investor. So that means do your research even more. Like, you want to bring in the right person. They will be vetting you. You should vet them. There's no sense in doing random outreach to a bunch of investors. First of all, they will say no to you if it's not specific. You're wasting your time. It's like randomly applying to 1,000 jobs on LinkedIn. I don't think that's how most of us are getting jobs nowadays. Do your research. It's a two-way street.
Be
And
picky.
ultimately, be picky. You should only have them join you around if it's a good fit for you. If you think they can offer more than just cash, especially if you feel like you're building a strong business and you can find cash in so many other ways. So that's kind of my take on that. I think ultimately there's a moment where it makes sense to bootstrap. There's a moment where it makes sense to fundraise. And actually, I'll bring it back to accelerators here, because I think accelerators can be a really, really viable option because they are doing this extra bit I talked about with investors. They're showing up in, the, like, your right-hand hand and your co-founder and giving you that extra bit. And I think it comes to the name of your podcast, if we will, Never Build Alone, right? That's what an accelerator is doing. It's telling you, you don't have to do this by yourself. You're going to have a better time, an easier time.
Arguably, you
do it with
shouldn't,
someone
right?
else. Yeah. That's what I believe. There's definitely founders out there who disagree, but
Yeah.
that's
I mean, we can even
how
dig into
I
that
see
too.
it. Yeah.
I think there's I have a follow-up question kind of tied to that, specifically
Please.
to failure and the formula that you have seen. I want to take a quick second to have a hot take on bootstrapping and versus accelerating. And I'm curious, I want to mention this because I'm curious what you think. I think you might agree with me. So it's not really necessarily a hot take, as it's like an intersection of the two. I would argue that every good founding team is doing both, irregardless. There's a lot of folks out there who are, like you saying, want to bootstrap to pat themselves on the back, or they've had a successful exit and they have the luxury of doing that.
Yeah.
Or people just want to be the next MailChimp and own 100% of multi-billion-dollar company.
Yeah.
Obviously that would be glorious. But I think us as founders, we all need to be doing a little bit of both as we raise money. You should raise money with the assumption that you're trying to squeeze every dollar, value out of every dollar. And so you should be having that continuous bootstrap mindset to make sure that you're not over hiring, to make sure that you're not over engineering, to make sure that you're not skewing away from the ICP that's helping you get to that next milestone. And so that would be kind of just, I think, the general hot take that I have from perspective of even when you raise multiple millions of dollars as a seed round or your accelerator round, make sure you're getting max value and keeping that
100%.
hunger alive.
I completely agree. And I think this is also why my addendum to what you're saying, I think we're on the same line of thought here, is when you're going out to raise, I know it sounds so silly, but don't just go, where's the wind blowing today? Oh, I'm going to raise 2 million. That's not a way to decide how much you're going to raise. You should be looking at the details of your current runway, current expenditure, and your plans for the short-term future, the near-term future, I should say, maybe 24 months at least, 36, and figure out, okay, I need to allocate these dollars here, these dollars there. And that's going to help you figure out how much you should go out and raise. Don't just try to raise whatever amount you
really
can
great tip.
get to. And I also think it's going to impress investors. You're going to have an easier time if when you pitch them, you say, this is exactly how I'm going to spend your money. And this is why I think it's the best way to spend it, because I've done all this research, I've done all this thinking, and I realized that I'm going to get so much bang for my buck if I spend in this way versus that way. And this is why it's going to help me get to this point where we're going to talk again in 2 years' time, because I'm going to be raising again and I will have achieved everything I wanted to achieve with this money I'm raising right now. Right? That's going to impress an investor if you have your shit together and you know exactly what their money's going to, and you can justify it every step of the way, because they're going to ask you, right? Once they come on board and you meet with them and you're on your board, they're going to ask you. So you should have a killer plan that's not wasteful, as you said, especially like in this ecosystem, even more so. Maybe in 2021, who knows what you're doing with that money. But right now, you should have a good plan. So 100%.
Yeah, that's fair. I like that little caveat or the asterisk or whatever you want to call it. And I think this probably might even segue, this question might segue into what we might talk about next. But in kind of off this topic, what do you feel like is your formula for success? I think maybe beyond obviously having a product that people actually want to buy, you would kind of mention, I think in some of your previous comments about velocity too, like moving fast or slow, obviously fundraising to increase that velocity. Like, what do you feel like from what your experience historically, like is what you've seen as like the formula for success? And obviously success is a little bit vague, maybe like allowing that particular company to get to that next milestone.
So it's a great question. I really don't think there's one formula. That's why we talk about the MailChimps versus the Airbnbs or whatever, like that. There is multiple ways of doing it. So I don't think there's one way to do it. And I also really think it depends what kind of industry, what kind of market you're in. I think that's the first thing you should really look at and be like, okay, I'm building a healthcare solution that has hardware involved. You don't want to look at MailChimp. That's like not the business you're in ultimately. So look at your peers. I think that's going to give you a much better sense of what is a formula that can work a lot better for you. To bring it back to my experience, I would say from the accelerator side, right? And accelerators, I think there's another difference maybe from incubators I didn't touch on earlier, are much more competitive to get into. A good accelerator, a Techstars, a YC is taking maybe 1-2% of applicants. So it's pretty competitive. What are they looking at? This is like the really, really big picture stuff that's going to apply no matter what kind of startup you're building. And I really believe in sort of the formula Techstars has in this sense. I bought it. I drank the Kool-Aid. What are they looking at? They're looking at team. Literally team. If you look up the criteria for admission, you're going to see number 1 team, number 2 team, number 3 team. And they mean it. They mean it. This means a couple things. So one, you have a strong team. They want a strong team. We've talked about the value of not building alone. I believe in this as well. So that means not one founder, not a solo founder, but 2 or 3. Again, there's exceptions to this rule, but the majority of founders that go into accelerators are not solo founders. Now, if you're a solo founder, there's programs like Entrepreneur First and others that do founder matching, upper conversation, but ideally a team. And number 2 is this is where the focus is going to be as they look at your application. It's going to be looking at the profiles of the people that are part of your team. What is your background? What's your educational background? What's your work experience background? What is your team dynamic background, right? Techstars love to hear, oh, me and UA have known each other for 6 years and we've worked on this challenge and we overcame this thing. And then we learned about this and then we got frustrated with each other about this third thing. And this is how we solved it. That's a great story for your team. Not we just met and we kind of need each other to try something. That can work, but it's not going to be as compelling. So they want to know your background as a dynamic and
there's cohesion there.
That. Yeah.
Long-term cohesion.
100%. And they want to see that you can overcome things together. You have different strengths that balance each other out and that you let each other do the thing. I see this so much. We would do sort of at the end of the application process when you're final round, if you will, there's a sort of a screening selection committee. And you'd see founders that show up, and this is like slot. This is like 10-minute slot to try to get in, right? You've been working on this for a while. and founders show up and it's one of them and they're two co-founders. And where'd the other one go? Why are you not here? Or they show up and only one of them talks. Okay, red flag. What's happening? Why? What is this person contributing? Why does the person that's talking not trust their co-founder to say anything? Red flag. So I think they really mean it when they say team, and I strongly believe in that as well. Ultimately, it's a people business. I think for me and my work experience, people make or break your experience and your ability to execute. So team, I got on about it. Oh yeah,
No, it's
especially
very important. I
yeah,
think anyone listening should be very adamantly digging
I agree.
into everything that you're saying here, because I can speak from my experience. I've applied to YC twice and Techstars once and failed all three times. So it's again, like, it takes a little bit of time, but learn from each one of your experiences and
Yeah.
try to listen to tips like this that could help you break in that next time.
Yeah, no, for sure. And you're not alone. A lot of people apply multiple times before getting in. So don't be discouraged if you're listening and you've also
Yes.
applied before. Number two, I would say for me is traction. So this can be many things. I think a lot of founders think traction, 1 year, other year, ARR, MRR, revenue. Revenue is a great way to show you have traction. Only way to show you have traction. When we're talking a really early stage and at an accelerator, we see a lot of pre-revenue companies that come in and apply and are successful and get in. We expand the definition to say, okay, traction can be things like you have done a certain amount of validation on your go-to-market plan. You have the users you have, maybe you're not generating revenue, but there's a really strong retention. They're asking for features. They really say that they value your product. Their life would be much harder without it. Or, you surveyed folks and there's a lot of demand for what it is you're building. You have got really high response rates. People want what it is you're going to work on. It could be LOIs potentially from someone that's really interested in working with you, even though the product is not ready. So there's other ways to prove traction, but essentially any kind of forward momentum. At this point, we're seeing companies that are mostly have been around for around a year at least. And so what's happened in this year? What's that momentum? And a lot of that is also externally. So rather than just if we're co-founders, the three of us sitting here and be like, our product is really great. We like it so much. And we're going to add new features without anyone saying they want it. That's going to be a bit harder to sell. So I would say traction, whatever way you want to try to show you got it, do it. And number three, I would say is market. Is there a big enough market for this? Ultimately, again, a venture-backed accelerator is an investor. They want you to be playing in a market where there is that upside potential for them that is relatively large. A non-equity program where I approach this differently and think about this differently, but at Techstars, we definitely found it was quite important. And by that, I also mean like something that I think is always a trend you see is founders that are in love with their solution. That example I just gave. And the thing that we've often come back to is fall in love with your problem, not with your solution. Your solution might need to change. You might need to pivot. The circumstances, technology, a lot of stuff can happen. But if you fall in love with solving a given problem, you will have the tools and you will be equipped to change and solve for that problem in different ways, in new ways, as you get more information. And you're not going to dig yourself into this hole where maybe you're building something that you think is great. Maybe it even is great, but no one wants it. It's not solving anything. And then you're stuck. So a big enough market, so a big enough problem is gonna go a long way, because then if you need to change kind of what you're focusing on, that's fine. I actually think that's something to keep in mind. Really often at Techstars, we would see companies pivot in program. Really often.
Okay.
It's not an outlier. I would say maybe 20, 30% of companies do a full pivot in program. That's a significant percent. So, and they might even take you thinking we want them to pivot. They don't tell you this, but sometimes I've seen that happen. These are great people, really like what they're doing, but they need to refocus a little. So market is going to be a really important one there. And then I think last is idea, which is not what a lot of folks are surprised by that all the time. But I actually think ideas are a dime a dozen. Everyone's got an idea for a startup. If you don't have those other three things, if you don't have team, traction, and a market figured out, your idea is kind of worthless ultimately. Figure those out, and then hopefully your idea can slot in really nicely and complement all those things. But yeah, that's kind of how I would say that the formula, if you're looking to apply, tick those things off, they will be asking about them.
Nice. Thank you for that. That was
Of
helpful.
course. If I can give some insider tips, I'm happy to. I think it kind of boils down to a couple things. The first one we've already talked about, but I will just click on it again, is do your research. We talked about doing your research with investors. Do your research for accelerators, incubators. Don't just apply because it says Techstars. It just has a lot of different programs that are run by different people. Do your research. Figure out which program is right for you, which investors are right for you, right? So attend their events, read their newsletters, follow people on social media. Try to get in, try to get face-to-face time, right? Whatever way, office hours. And find the people. Again, it's always people. It's not some nameless institution. It's people that are running the program. Figure out who those people are. Do you like them? Do you want to work with them? Is their experience interesting to you? Is their perspective on the world interesting to you? Figure it out before you apply, ideally. It's going to help you figure out where not to apply, perhaps. I would say talk to alumni. Again, research. We want to get a sense of, okay, where was the real value? What would they have done differently? Even if you get in, it's going to give you a lot of tips on what to focus on in the program and what was a better way to structure your time. Mentors as well, Techstars, but most programs have a lot of mentors. Most of the time, these mentors are volunteers. Very few programs pay their mentors. Techstars definitely never did. These mentors are volunteers, so they already know that they want to volunteer their time to work with startups. Incredible. Find them. Most of them, it's public. They're super proud to mentor. They put it on their LinkedIn. It's a badge. Yeah. Their photo shows up on the event slide presentation, whatever it is. Find them. They're out there, and they literally said they want to help. So it doesn't mean they're always going to answer you, but find them, and then you'll see, oh, this mentor's really interested. I should apply to this program because I really want to work with them. I really want to get their insights. So do your research on all fronts. I'm always going to help you. And then we've also kind of talked about it. Be prepared. Be prepared. It's really competitive. If you get a chance to talk to someone, be prepared to have that conversation. So put in a lot of effort into your application. They see thousands of applications. Make yours stand out. Do whatever it is. It's your special sauce. Make it stand out. Articulate why this program. Why now? Well, if you applied to 100 programs, okay, but why this one? If you like for a job, you should be able to say why you wanted that job, not just I want money, please. Founders come in, that's kind of what they say. And that's not super helpful. And then also have a good answer to the question of why, what do you want to get out of it? And the answer should not just be I want to fundraise. Everyone wants to fundraise. Thank you. What do you want to get out of this program? It goes to the widest program. So I really want to work with companies in this sector, in this market, and I see that you have mentors and investors that are working specifically in this market, and I want to build those connections. Or I really want to learn how to do this aspect of my business. I'm a first-time founder, and I recognize I'm weak in these areas, and I want to really learn, and I know you have a lot of success teaching people how to do this. Have a specific answer. So be prepared in that sense, and then the stuff we talked about at the beginning. So sort of, if it's a venture backed, be investor ready, have your cap table in order, be incorporated in the right spot, all those sort of technical details. It's always going to help. You're going to have a quicker, easier time getting through the stages. And it's kind of like having a clear criminal record. It's going to just move you along. No questions asked, rather than what is this big red flag? And now we have to talk about it.
I just want to say, Lily, your passion about startups and helping founders, it is very empowering. I can see it's like
appreciate that.
Brightening through the screen for me.
It's very kind of you to say. I really appreciate that. I'm glad it shines through.
What is next for you?
For me, yes, great question. So I've left Techstars last year, and so now I'm looking for my next opportunity. As you can see, I think, as we talked about, this is a space I'm really passionate about. I had my sort of aha moment, and here I am. I want to stay in this space. I'm looking to either stay, whether it's on the VC accelerator side or going back to a startup, which we didn't quite talk about, but I have worked at a startup as well. But I want to stay in the impact investment, impact startup space. Specifically for me, that means right now I'm looking either at any sustainability, climate tech focused startups. I'm based here in Europe. There's a lot of renewed interest in that sort of stuff here, kind of parallels with the sort of wave of deep tech we're seeing right now. So really care about that type of project and would love to be involved there. Or on the circular economy side of things, I think we see sort of the through line there. Something along those lines would be really fantastic. Or something around sort of ethical technology adoption. So how do we not just only scale, only break, only go, but how do we incorporate these things ethically into people's lives and our systems and our processes and how we do things. So those are sort of the three big buckets I'm looking at right now. So yeah, hopefully hoping to find something there. Always happy to have a chat. So if anyone wants to reach out, thinks we can collaborate on something else or is interested to just chat along. You guys will have my details and plop them in the description, and they can reach out.
Awesome.
All very timely and needed right now. That's for sure.
Yes. Yes, for sure. Yeah. How do we ethically adopt tools? I don't know if enough founders think about that, especially if we're tool stacking for non-technical founders and how companies use data, all of that. That's a big can of worm.
Why
Big
would
can of
you? When
worms.
move fast and break things is is everyone's motto.
Yeah. And it's
for
kind of
sure.
like we broke a lot of things. Maybe we should rethink that. I mean, I think
Yes.
they've actually changed their slogan, so maybe a good thing to think through. And also, let's not break ourselves in the process.
Yeah.
It's a big one that we don't talk about a lot. I think there's a lot more focus on it now, but let's try not to break ourselves either.
For sure. Lily, what would be your call to action to founders or anyone who's interested in the startup space?
The startup space. Okay. It's a great question. I think my call to action is don't do it alone. Find your people, find your community. It's out there. It might not always be obvious, but it is out there, whether it's in the city you're in or online virtually. Find it, join, show up, be a member, be involved. You have something to contribute. I came with not a finance background, not an engineering developer background, and I found my place in this world. You have a valuable skill to share, even if you've never done this before. Leverage that. You can contribute that and be generous with that as you're entering a community. If you are not finding a community you want, build it. Build it. You're not alone. Whatever it is that you have that you feel you're not finding it, people, someone else has got that, and build it. And by just doing that, you're going to learn a lot about yourself, about the process, meet a lot of fun people on the way, gain a lot of insight. It's going to be worth your time. So that's my number one advice.
Love it.
I mean, oddly enough, that's why you and
Yeah,
I
that's why we're here,
wanted
actually.
that is why Never Build Alone exists. It was purely for that. I struggled with it a lot, kind of trying to find that community when I first was founding. I got lucky in pandemic times, and Y Combinator was doing a startup school remote, and it allowed me to kind of connect with a bunch of other founders, and that resonated deeply with me because a lot of resources that were out there were few and far between. So I resonate deeply with that. I think that's a phenomenal call to action. And hopefully we will be that one of those communities for people. So that's the hope.
I hope so too. Yeah, don't do it alone. You don't have to. There's no pride in doing it alone. Don't be a hero.
Yeah, it's a long journey. So it's like it's much harder if you go that route alone.
100%. Sure. And people who've been in your situation, made the mistakes you're making, you're gonna also grow faster by doing that. And you're only gonna have so much insight within your own brain. You gotta reach out to others and get their input. So
you don't have to cut the same path twice.
100%.
Awesome. Well, this was great. Definitely a super enlightening conversations.
Great. Well, thank you guys for having me. I will send through links on things for founders, resources, like educational resources, things to look into, especially geared towards if you're thinking about fundraising, thinking about applying to an accelerator, stuff like that, what to think through. Along with maybe a couple other, fun little tools and bits that could be helpful if you're really just starting out.